Bitcoin is just such a clear solution and such a clear answer for many people, even if they haven't really thought about, okay, at a macro level, how's it going to fix the social and cultural problems of our day? It's going to fix a very important issue for each individual or each person, which is, how do I save money? How do I not lose money? Everyone wants to not lose money, right? If you're an individual, a company, a family office, even a country or a state or a nation state.
Like there's this economic theory that doesn't really work in favor of the people participating in the economy. It works in the favor of, for lack of a better definition, the people controlling the economy. Is that a correct assertion?
Essentially, people are kind of trapped and they are enslaved in a way that, and they don't really realize it. Now, of course, Bitcoin is the way out. And the smart ones will know, okay, yeah, I've got to get Bitcoin to get out of this. There's a lot of people who still haven't realized that yet. And so they're participating in an economic system that doesn't benefit them, that basically steals from them. And it's time more people realized it.
Hey there, I want to ask you for a quick favor. Over the past few months, I've had over 50,000 returning viewers and listeners to this podcast, but over 65% of you haven't subscribed yet. So if you enjoy what I'm doing and you find my content valuable, please subscribe on YouTube or follow me on your favorite podcasting platform. This will help me fuel the algorithm and spread the message on Bitcoin even further. I really appreciate your support. Now let's dive into this episode.
All right, Stephan Livera. Welcome to Bitcoin for Millennials.
Hey, thanks for inviting me.
Yeah, man, thanks so much for coming on. As I just said off mic, I've listened to you a lot. You are, I think, one of the podcasters that also inspired me to start this. So thank you for that.
Great.
So I'm excited to chat today. I think you have really interesting angles. I think a lot from like the let's say call it the economy dimension of Bitcoin, which is something that I totally don't have a background in. It's, I think, that and the finance dimension, I think, have been the two parts of Bitcoin that I've been diving in for the past, let's say, two and a half years, that really strengthened my understanding as to, why does Bitcoin have a reason to exist. So yeah, I'd love to dive into the economics part. And I wanted to start with, I often say that I kind of like see Bitcoin as a mirror, like it's a parallel system that offers something completely different to what we all know, the fiat money system. How do you see Bitcoin's fixed supply challenge and impact, the traditional monetary policy tools that, for example, central banks use, if you agree with this notion of Bitcoin being this parallel system?
Yeah, of course. I think it is it's a parallel system, but I think it's going to evolve over time, and more and more people are going to adopt it and use it, and it's going to become the primary system eventually. So I think probably most, like, let's say, hardcore Bitcoiners would agree with that statement, right? But in terms of why is it novel, this whole fixed supply, to me, it is a rejection of hundreds of years of government propaganda, maybe even thousands of years of government propaganda and control over money. Because for a long time, the person who controlled the money got to command a lot more of society's resources, right? Because if I'm the king, or if you're the king of the society and you get to, do some coin clipping or do a little bit of shaving, or let's say debasement of taking out the higher quality metals and replacing them with lower quality metals and then circulating those coins out, guess what? You are, in a very subtle way, raiding the accumulated wealth of that population. And so there's a lot of propaganda that goes and is taught to students and just people in general so that they accept this system. And it's a huge scam. It's a massive scam of their property rights, of their freedom overall, and just of their wealth. And so people have these different schools of thought, whether that's the Keynesian school of thought or the Chicago school of thought, or the, in the monetary sense, or in terms of schools of monetary thought, you have things like the Chartalist school of thought, or you might have, nowadays it's sort of rising in prominence is the MMT people, especially amongst more left-wing politics. So a lot of these people will sell you this idea that, oh no, you little pleb, you aren't smart enough to choose your own money, and the money left on its own without government intervention is just not good enough. The government or the state must intervene to do some kind of counter-cyclical operation in terms of the economy to sort of stimulate when it's down and to sort of go the other way when it's running too hot. That's kind of the narrative that we're fed. And of course, Bitcoin challenges all of these things by just saying, hey, what if we just took that outside the control of anybody and just said, no, 21 million or just under 21 million, and that's it. No changes. So I think that's the big change. It's the propaganda aspect, the economic aspect. There's just all these elements that come into it, but fundamentally, it is what is your economic theory that allows you to explain why a fixed supply money can work.
Yeah. Yeah. One of the things I learned along the way, and I don't know who said it, but they said like economy is not a science. It's like a social study. It's how people interact with each other, how they value or the products and services, right? And they communicate or they express basically what they find valuable, like in a marketplace. And so I find it very interesting when you say, these classic schools, they are like, okay, when everything goes up, everyone is happy and everyone is fine, right? But when things go down, we need to intervene. But if you just follow the simple idea of it's a social study, if there's too much stuff that's not valuable, then people don't want to buy that, right? If there's a consensus that a lot of stuff or products or services that are being offered are just not valuable, companies offering those products and services will go bankrupt because nobody wants to have them, right? Like that idea for me is just very logical. It's like a free market. Anyone can try anything, but if you suck at it or it's not good enough, then it's fine if you fail. But it feels like the people that you just mentioned that then say, well, but we have to intervene or prop it up or whatever, like their goal is not to have a free market. Their goal is to keep control over the money. Is that correct if I think about it like that?
Yes and no. So I mean, some of these people, I guess if I had to steelman, some of their views would be that, the free market left to its own devices won't do good enough. That's kind of the view that they might take.
Good enough for what?
So as an example, like if we're going to really dig into it, as an example, like a Keynesian or some of these people, they may sort of point to what they might call an output gap. They may say, oh, look, there's all these unemployed resources and you're just going to have this persistent problem because of this problem with the money. Therefore, blah, 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 all these other aspects. And then, you can talk to other people who might say, oh, well, we don't have enough supply of money. We need government to create more supply of money. So they'll have there'll be various arguments back and forth on this. And so I think that to me, it's also why it's important to read and understand Austrian economics. And I think the way I see Austrian economics is it's not an art, or it is a science in a sense. Like it is a science, but it relates. Let me explain it this way. There are only certain things that you can sort of say in a scientific way economically. And then there are other elements of, things where you are, let's say, stepping away from the value-free economic kind of predictions that you're able to make, and that you are sort of having some level of speculation or some level of applying history to try to speculate where things are going.
Yes.
Yeah, but I mean, to bring it to the short answer, I guess, to what you're talking about there, though, is that these other schools of thought believe in a deeper or bigger role for the state to manage the money or manage the banking system, because in their view, they believe that that's what you need for a healthy, functioning economy. Now, the Austrians and those who are more free market oriented would say, no, actually, we don't need the state to control money or to control banking. And actually, it would function better and more ethically without the state involvement.
Yeah. Yeah. What I find so fascinating is that these people want to model human behavior, but at the same time, they're talking about, there's all this freedom and you live in a capitalist free society, et cetera, et cetera. But they're still modeling you within a certain confinement in which you can operate, right? So it's not really a free market. It's probably better, especially in the Western world, right, than a lot of other countries. Maybe that's also why people don't really complain about it or investigate it, because it's just good enough for us, and we still live a more prosperous life than many other people in the world. So with the introduction of Bitcoin as this parallel system, how big of a battle is this? You said hundreds or maybe thousands of years of indoctrination about money and the government doing that. Like, how would you illustrate the size of this battle?
So I think in some ways you could say fiat is going through this decline on its own anyway. Now, I'm not being a doomer and saying, it's all going to end next year. I'm saying this is on like a 15, 20-year time horizon. Fiat currencies will just be on the down and on the way out relative to Bitcoin. And even in 20 years' time, it may not be fully done, right? It's going to be a long process, but I think that's why you've got to have patience. If you're going to be a Bitcoin hodler, you've got to have patience here.
Bitcoin custody is evolving. And while self-custody is important, it has its own risks and trade-offs. OnRamp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your custody setup. OnRamp secures your Bitcoin in a segregated cold storage multi-signature vault, guarded by 3 independent institutional-grade custodians, none of which have unilateral control. Your funds are fully auditable on-chain, cannot be rehypothecated, and can only move or withdrawn at your explicit direction. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. Bitcoin is money, and as the price continues to appreciate, OnRamp helps you seamlessly tap into financial services like trading, inheritance, insurance, loans, IRAs, and more, all without compromising on security or accessibility. Check out onrampbitcoin.com through the link below and schedule a consultation with the OnRamp team to get to know them and learn more about their offering.
But to get into what is that change going to look like, I think part of that is just going to look like governments are becoming increasingly sclerotic. They're not able to function very effectively. They are sort of trying to steal from the young people and pay to the old, or steal from the productive and give to the unproductive, right? So we're seeing these welfare state Ponzi's. We're seeing these incredible money wasting, big government programs, whether that's, these overspending military programs, or whether it's, massive waste in the healthcare sector, or it's massive overregulation and bureaucracy that's just really hurting various economies around the world. And so what we're seeing is the cost of living is rising, the cost of housing is rising, and we're starting to get these social problems that are coming to a fore, let's say. And I think we could even look at the recent US election and see that's some of that element there of the country is quite divided, and it was very, very divided. And I would say now, if anything, of course, Trump has many flaws too. I'm not saying he's perfect, but I think there is a sense of a bit more optimism. That's certainly something I'm detecting in terms of just what people are saying coming out of America. I think people are sort of more optimistic now that some of the worst of those excesses might be pared back. I still think the US has a lot of problems, right? They have a lot of debt. There's just a lot of broader issues that are happening anyway. But I think it's the problems are rising, and then Bitcoin is just such a clear solution and such a clear answer for many people, even if they haven't really thought about, okay, at a macro level, how's it going to fix the social and cultural problems of our day? It's going to fix a very important issue for each individual or each person, which is, how do I save money? How do I not lose money? Everyone wants to not lose money, right?
Exactly.
So whether you're an individual, a company, a family office, even a country or a state or a nation state, or a fund or an endowment or whatever, you want to not lose money. And you also want to not get your ass kicked too badly by other possible things you could have invested in. And nowadays, if you look at bonds or stocks or gold or property, you pretty much, unless you had picked it perfectly, you would have lost money versus just holding Bitcoin.
Yeah.
What do we see? We're going to see more and more people realize and learn that. So right now, it's, yes, I mean, to the point about propaganda, yes, we were talking about that. There's been a lot of propaganda, but it's not just that. I think it's also that people are very set in their ways. So a lot of people are focused on the way that they have made money before and think that's the same way to make money in the future. So whether they are a property guy and they're doing property flipping, or maybe they're doing rentals, or they're doing Airbnb, or whatever, like however they've made their money in property, they think, oh, that's the way to make money in the future. Or if you've been a stock guy, or if you've been a bond investor. So whatever it is, there are a lot of people who are still stuck in their old ways and not recognizing there's a big new shift coming, and it is going to have massive, massive ramifications in the world of money, finance, economics, and all of these things. And so to me, the real benchmark is Bitcoin. If you didn't beat Bitcoin, you haven't been profitable. At least that's how I see it. And I think if we were to talk about this in 10 years' time or 15 years' time, there'll be a lot more people who agree with us on this point. Whereas nowadays, look, the number of people who think like this is, it's a fraction of a percent, but that number is going to dramatically rise in the next, call it 15, 20 years.
Yeah. Yeah, I love what you said. I think, and you probably also have the same feeling, you could talk to anyone about Bitcoin, right? Like any possible skeptic, and you can defer all their arguments, because eventually Bitcoin is just ultimately transparent and it's very rational, right? So it is, I think, not hard to deflect like certain like old school arguments that people would have, looking at it from the paradigm that they're in towards this other paradigm, right? As Jeff Booth talks about, like that just makes it really hard for them. But what you said about, stealing from the young and giving to the old, I think what people should realize, and of course, this podcast is Bitcoin for millennials. I think millennials should realize that this path that the US is on, and therefore the rest of the world also, as the dollar is the world reserve currency, is this, they're dependent on this path of basically sustaining their debt spiral unless they, come up with some novel, Bitcoin, some novel addition to, their assets, etc. So you have to realize that in order to service the pensions and the Medicare and all these things for the older people, they have to steal from the younger people, right? Or else the older people will, and I don't want to say revolt, right? But they will become a problem in a sense, which eventually will also be a problem for the younger generation, right? So I think the first step is kind of like to acknowledge that this path exists, that this train is running, and it will follow this path, and that you have to, kind of like project towards the future that your pension will probably be the pension of someone who is actually retired right now. Like that money is just sent to them, and yours isn't really there. Yesterday, I saw a chart of, well, my country apparently has the highest privately held pensions in all of Europe, but in other countries there are basically no pensions in Europe. Very, very, very low. Like a shocking chart, to be honest. So you have to realize that first. And even when you're thinking about retirement, I heard this example last week. Someone said, well, let's say you want to go on your holiday. Yeah, like each year you want to go on like a $10,000 holiday when you're retired, right? But if you just calculate with, I think, 2.5 or 3% inflation after 35 years, that same holiday is probably like $36,000 units. So you can have $10,000 units in your retirement account, but you have to have 36,000 to have that holiday, right? And so I think once people realize that this is happening towards the future, that should be like the signal for them to kind of like act on what else are my options here, or like start learning about, well, what is money? I think is the first question there. But when they think about Bitcoin, I think what is a difficult question to answer is, what does it actually produce then? So it's not a stock. Some people say it's a commodity. If someone asks, what does Bitcoin produce? What would be your answer?
So to answer this, we have to come back to why do we hold money? Now, an Austrian way of answering this is to think of it as when we hold money, it helps us reduce our uncertainty. And so the simplest way to think of it is savings, right? Or you can think of it, a digital or a virtual commodity. So you can think of it as money is the most marketable or most saleable commodity. And Bitcoin just has these qualities that make it the best, to make it be the best money. It is because it is extremely scarce. And that's not the only thing. It's all of these other things, right? It's divisible, it's fungible, it can be sent around the world. And all of these aspects all blended together make it the best money. And for most of us, we're just sort of waiting for the rest of the world to realize and wake up. And so I think that's one thing. But I mean, to answer the point around, it's unproductive or whatever, really, you've got to think of it like there are times where you have to deal with uncertainty, right? Because if we knew the future with perfect certainty, well then, okay, maybe you could keep money in term deposits that kind of are created or are finishing just at the time you need it. But as an example, I might break my arm and I might need to go to the hospital tomorrow, and I might need to be able to pay with money to get things fixed. So it comes down to reducing that future uncertainty. That's really what money does. And so the simple way I normally explain it for people is think of it as digital savings, right? Or savings technology. That's the easy way to think of Bitcoin. Now, you may run into another hurdle there because sadly, there are a lot of people who don't know how to save. And some of that is, they've had bad teaching, bad training, bad culture that doesn't encourage people to actually save. Now, some of that is also because of the fiat system, right? Because if they save their money into a standard bank account, they're losing value over time because of all the inflation and because they're just losing pace, right? Their job is not their salary increases are not keeping up with the cost of living. That money held in the bank account is not keeping up with their cost of housing increases or other living costs. So it just comes down to understanding the power of saving and being able and willing to save. Now, to be clear, there might be a small group, there may be people who can't save because maybe they just don't earn enough. But for the people who can, they're the ones who really should be saving. And what you'll find is that there are a lot of people who tell you, oh, I can't do it or whatever. But then the next minute you'll see them go and like waste money on, drinking at the bar or some other, silly expense where, yeah, they could have cut that and they could have saved into Bitcoin. And if they had done that for 5 years or 10 years, pretty soon, eventually they would be laughing, right? They would be well ahead and at least having a chance to get ahead. Whereas I think a lot of people, sometimes they self-sabotage themselves and they stop themselves from actually having a chance to get ahead because they're not saving, and crucially, not saving with Bitcoin.
Yeah, I love the concept of, I think it's Saifedean who talked about, the future is uncertain for everyone. You don't know how much time you have, right? Like that is the same for everyone across the board. So what can you do to lower this uncertainty towards the future? And yes, that is saving. But if in the classic way of saving with fiat money, you basically lose value, that actually heightens the uncertainty. So you want something that lowers the uncertainty. So when I answer this question, I think what Bitcoin produces is let's say your uncertainty is minus 80 or whatever. Saving in Bitcoin brings it to, I don't know, minus 50 or something, right? It adds a little certainty towards the future because I think the core of that is what is that it will never be diluted. It will always work as promised, right? The whole concept of Bitcoin is these are my monetary rules. I promise to keep working like this. And you can check that for yourself every 10 minutes, basically. So towards the future, it just shows you that, it just stays the same. It's just a constant. That's where the one Bitcoin comes from, right? And sometimes you hear Christine Lagarde talk about like €1 is €1, and then it's like, no, well, actually €1 in 1999 is 30 cents today, but and I think that is the core difference, right? In the sense of that euro would have given you more uncertainty, whereas a Bitcoin compared to the fiat money system gives you even more certainty than what it produces by itself. So I think just looking for like these analogies and kind of like visualizations or illustrations for people to kind of grasp that. But I love that idea of like creating less uncertainty towards the future. That is what gets you ahead and motivates you, I'd say.
Yeah, I mean, in simple terms, Bitcoin gives you certainty in this uncertain world. That's the kind of the postcard version.
Love that. So I think we touched upon the scarcity aspect, right? But Bitcoin has absolute digital scarcity, right? So we know when it's issued, we know how many there will be, etc. How does this challenge kind of like traditional economic theories of value? Like how do you value something that is absolutely finite compared to, well, anything you probably know you can make more of? Right?
Yeah, I mean, when it comes to valuation, I think, there's different ways to look at it. You can, let's say, look at the comparative with gold and say, okay, the gold market as a whole, I mean, last I checked is maybe 17 or 18 trillion, something like that. Bitcoin today is maybe 1.8 trillion or 1.7 trillion, something in that range. Maybe a 10x in Bitcoin would bring it roughly to gold's level. But of course, many of us think it's not just gold. It's actually much, much better than gold. It's like a 10x or 100x or 1000x better than gold. And so we do anticipate, or I anticipate, that it will, quote unquote, suck value out of other categories also, whether that's stocks and property and bonds and, art. And I think there'll be more and more people who, instead of storing their value in properties around the world, they'll think, hey, why don't I just store my value in Bitcoin? So it's kind of difficult to really come up with a long-term number. If I had to guess, kind of in today's terms, we could be looking somewhere like 10 million USD-ish per Bitcoin in today's value. It could even be more than that. I mean, we don't know. But if let's say 10 million USD gets you like a really nice mansion somewhere, then maybe that's kind of the rough, equivalent thing that a Bitcoin will get you in like, I don't know, 30 years time or something. Who knows? But I mean, even that will change, of course. Like, let's say with technology, people can build really great mansions really cheaply and whatever. Whatever. Like, so it's always it's a moving target, right? But I would say the high level way to think about valuations is to think about comparable markets and to kind of come up with a rough idea on how much could Bitcoin, let's say, suck out of those per se, even though that's not technically how it's happening, but just kind of loosely speaking, I think that's what it'll look like in the future.
Yeah. I think it's similar to, or maybe you have that from him too, what Jesse Myers has shared at him on a podcast a few episodes back. And he has this great chart where he shows like where is all the money stored, basically, where what are the stores of value. And, he has this calculation which I think is very
right. Yeah,
very
yeah.
low
And I
percentages,
mean,
right?
he wasn't actually the first with that either. I mean, no shade to Jesse, but I remember like Trace Mayer was doing that kind of thing in like 2012 and 2013.
Yeah.
So,
That's fascinating.
this kind of analysis, I think, shows you sort of how it could sort of pull a little bit from each of these different areas to kind of come up with an overarching number. And so, where exactly it goes, I mean, who knows? I mean, because there's so many moving parts here, right? How productive is the world going to be? What is the demand to hold money, right? Like, how uncertain do people feel? As an example, if there's a natural disaster going on, people feel much more uncertain. So they're much more likely to save. And I'll give you actually an interesting point. During the year of 2020, during the COVID tyranny, when there was all these lockdowns and so on, there was a lot more saving. The savings rate spiked really heavily. And I think that sort of proves the point about uncertainty. The more uncertain people feel about the world, the more they would like to save money. Yeah, there's a lot of moving parts is the point in terms of where Bitcoin could go and how it may fluctuate. But in terms of how to explain it at a general level, it comes down to things like uncertainty and how much people choose to use it as their savings compared to other things.
Yeah, it's interesting. We went to the kind of like price, but I think what I meant with this question is more like, how do you not necessarily price it, but it's so difficult to compare Bitcoin to, well, these other things, right? Like art and real estate and gold. I mean, we can say like, oh, it's better because of these and these and these properties. But if everyone knew that, as you said before, right? Like we are still the crazy people, then people would get there. But even if people were talking about this in 2013, right? So 11, 12-ish years ago, why is it so hard to see it? Maybe that was more of my question. Like why? Because people look at it from their old perspective, right?
Yeah, exactly. I think part of it is people are reluctant to explore a new frame of thinking. And so it's like we're stuck in this rut and people are just kind of stuck in that little rut and they just think, okay, this is how I've made money before, or this is how my friends are making money, or this is like the people on TV, they're making money by doing property flipping or doing a startup and being the next Steve Jobs or, these kinds of things. So in their mind, that's how you get rich. That's if you're trying to do that. And so this concept of, wait a minute, maybe there's something wrong with money, as in with fiat money, and we need to change that by fixing the money. That's a whole new concept. And, the other thing, it's fair to say, most people are lazy. Like we're all lazy in a sense. Like we want to do the least amount of work to get the most outcome. And so for a lot of people,
Bitcoin is perfect for that after you do the work.
Well, once you've done the work, I mean, it's good to save in Bitcoin, obviously. But for a lot of people, it could just be that they think, nah, that's more work than it's worth. Or this is like some weird internet coin thing and it's technical. And maybe they get a bit scared about that because there are people who maybe they're not as tech savvy. And so they are slower to adopt it for that reason. So there's a few reasons for that. And I think the other big one is maybe a social and a cultural one, right? People do things by looking at their peers in the tribe per se. And not just that, they look at who's high status in that tribe, right? So if the high status person in their tribe is not is not about Bitcoin, then they're not going to care about that. They're going to care about, what the Kim Kardashians of the world are telling them to do. Then, actually stopping and thinking it through themselves. Wait a second, this is actually a better money than that. And why would this come to surpass the old way? Why is this such a better system to use? Because obviously we can freely transact all around the world. We can use Lightning and Bitcoin and all these things. So it's been a big hurdle to jump. Now, over time, in fairness, that hurdle is coming down over time. It's getting easier and easier right now with, big political leaders and all these, there are cultural figures who are talking about Bitcoin and things like this. So it is changing, but it's still not quite there yet. And there are still hurdles that you have to jump if you actually want to get some Bitcoin.
Yeah. And we just talked about saving. People are not saving, right? They have what is called a high time preference. So they value the now more than the future, but everyone is moving towards the future. So in some way you would want to, as we just mentioned, lower this uncertainty towards the future, which would give you a low time preference, right? So that you're confident or optimistic about the future. Yeah. How what I think is so interesting that studying Bitcoin is work, then getting into it and etc. But then holding it is a whole nother part of
that's another whole battle
of the journey, right? because it goes up and down, and your interest goes and leaves. For me, like I got in 2013, but I always said I bought at 300, sold everything at 4,000, and then slowly got back in. It goes like up and down. But what do you think invokes like this low time preference amongst people that eventually adopt Bitcoin? They have to hold it. There's a challenge, right, to not fall into the ego trap or sell it or become insecure or whatever, or just keep doing the work of studying basically and understanding. What do you how do you kind of like see this mechanism? Because I think it's interesting, like from an Austrian school perspective, they talk about this time preference, but you actually see that once you adopt Bitcoin, it kind of like changes people almost instantly. And if they think, I have this example a lot when I see a nice pair of sneakers that's like 200 or I don't know euros, and I think like, no, I don't need sneakers, and then I just buy Bitcoin because I know I can save this money. I think that is an example of that. But yeah, how do you see that, or how have you experienced that yourself?
Quick question. If you have your Bitcoin in self-custody, where are you keeping your Bitcoin seed words? For me, there's only one way, and that's backing up my seed phrase with stamp seed. It's a single durable plate without any parts or materials. Stamp your words into solid titanium, which is fire-resistant, water-resistant, and built to last. Unlike etching or engraving, stamp seed's patented tools help you to deeply stamp every letter for permanent readability, making it easy for you to protect your generational wealth. Don't risk losing your seed phrase on paper. Get a stamp seed plate for unmatched protection. You can use code BRAM, that's BRAM, for 15% off at stampseed.com.
Some of it's cultural, some of it is habits. I think for me, growing up, I was naturally a saver, which may be a bit unusual, but I had my first job when I was 14, and I was, working at the local supermarket and stacking shelves and whatever, but I saved the vast majority of that money, and I just kind of naturally was a saver already. So to me, the idea of hodling, to me, it felt kind of intuitive. The hard part, of course, is the dealing with the 80% drawdowns on the way, that kind of thing. But in terms of the saving aspect, I think for me, it was, I guess for whatever reason, I already was inclined that way. But, to answer your point about how it happens for most people, I think for most people, they are maybe not so hopeful about the world. They're maybe not so hopeful about their own future. And then once they start getting into Bitcoin, and then they start reading and learning and sort of realizing the future, the potential with Bitcoin, and their own financial prospects rise in time, then their own position starts to change, and they start to think more about the future, and they start to think more about, okay, maybe I should eat healthy, and I should go to the gym, and I should, get good sleep, and, look after the health, or look after, think about long-term family aspects of it, instead of just kind of, being on your own and not caring about having a family, these kinds of things. So there are lots of things. And I mean, that's just two areas. I mean, you could also say maybe in the business world or in other pursuits that people might have, whether they are academic or business pursuits, entrepreneurial pursuits, investing pursuits, whatever it may be. I think it does change people. And I've definitely noticed that as well. Even in my years, just kind of talking about Bitcoin, podcasting and writing articles and these things, I just see commenters saying, yeah, I got into Bitcoin and it changed my life. Some of these people, because maybe in the past they were like a drug addict or an alcoholic or something like this, and now they've sort of learned to kick that habit, and now they're focused on stacking sats, and they're focused on their family, and they're focused on all these things, and they feel so much more hope and optimism for the world in a time when you could argue there's been a lot of uncertainty and there's been a lot of these bad things happening. It can give you a sense of safety in these unsafe times. So I think that's also something to keep in mind. But in terms of the broader aspect of like, okay, learning to deal with the drawdowns, that is a hard thing. I think that just takes time. And what I've found, so this is the pattern I've noticed. Okay, I don't have like scientific numbers, but this is the pattern I've noticed.
Yeah.
People come in because of number go up, right? Whether we like it or not, it doesn't matter how many podcasts you and I do or how many articles you and I write or whatever, number go up is actually what draws people in. The best we can do, though, is have these podcasts and articles and guides and things to help people sort of come down the funnel and really get it, right? And become, okay, I need to learn to self-custody. I need to learn how to run my own Bitcoin node and these other elements of it. Because here's what happens, right? Noobs come in, they see the number go up, they come in, they don't really get the Bitcoin only message, or they think, okay, I'm going to gamble on shitcoins, I'm going to gamble on other things, whatever they are. And then they get wrecked, right? Like, because eventually the cycle taps out, right? Because every time we've sort of seen this happen, that eventually there's a lot of long-term holders who are basically cashing out some Bitcoin back to fiat or back to something else. Who knows? And so eventually that kind of stops the cycle. And then as Bitcoin is then crashing back down, that's when you sort of see the person realize, oh, okay, instead of trying to play around with all these shitcoins, I should have just been hodling and stacking Bitcoin. And that's when they start to actually do some real reading and learning. And maybe they listen to some podcasts or they read a book about Bitcoin instead of just sort of loosely buying things on an exchange somewhere and then thinking that that's the way to freedom and, financial freedom. So it's a pattern. That's something I've noticed. Now, we don't know what the future holds. It could be different next time in terms of how people typically learn about Bitcoin. Maybe some of them, their first touch point will be reading, good Bitcoin books that help educate them, or listening to podcasts that help educate them. But I think it's not a question of access, right? A lot of this material is out there for free. It's a question of motivation. Yeah. It's a question of psychology. It's a kind of a state. It's where is that person mentally? Because that person mentally is sort of thinking, I'm behind, I missed the boat, I need to gamble on random shitcoins, or I need to gamble on random high risk things, or maybe they need to gamble on leverage, and they're trying to sort of make it quickly. And then after, only after sort of the cycle is over, and then people are able to stop and assess in a bit more of a rational way. And at that time is when they start to sort of realize, okay, this is how you do it. You have a productive business or a job, you earn money, and then you stack sats. Like that's the simple formula that if you apply that simple formula for 10 years, chances are you'll be happy you did it.
It's so fascinating, right? Because people make it so complicated because the current system that they're in is also very complicated and abstract and obfuscated, whatever the words are that you want to use, right? So sometimes I think it's also kind of like too good to be true. Keep doing what you're doing, stay solvent, stack sats. That is basically it, right? And when you do that, there's this kind of like path that opens up for you towards your own future that gives you, again, that little bit of certainty that I think eventually is what makes you have a positive outlook, right? Which motivates you to keep doing what you're doing and stay humble, stack sats, stay solvent, etc. So it's like an interesting loop there. What I do think is that currently, while we're recording, I have a little backlog. So now I just say like the price, it's 90,000 and something. I used to think that like 100K Bitcoin would really break the internet. Like when I was, in 2013, I thought like, okay, if we reach 100K, that's going to melt everyone's faces.
In those days, even 10,000 was seen as like a crazy.
Exactly. So for me, psychologically, the 100K number for me is my own confirmation that it goes to 1 million and 10 million and etc. Right. So I just said that 10 years ago. Now I think, to be honest, the silence will be deafening. I think a lot of people were burned in this previous cycle, the whole FTX stuff or the China mining ban or whatever, like just the whole COVID, era.
Yeah.
And again, so we are at 90 and a half. Yeah. What do you think? Like, so I agree with you. It's kind of like a step change every time, right? Like, so there's this new group, some people fall off, some people stay, they start talking about it. They start a podcast, stuff like that. But yeah, how do you see that now? Do you think it is similar that people got burned and therefore it kind of like slows down the adoption amongst, let's say, plebs, general people slows down a bit?
So
or what
we're going to see more and more cycles. Now, this is kind of becoming a point of debate. And I guess to some extent it comes up every cycle, right? Because every cycle there'll be people who are saying, oh, this time is different. This is the final one. You better, hodl Bitcoin to the moon because it's going to 10 million this cycle or 1 million this cycle or whatever. So, I mean, who knows?
None of us, not this cycle.
Yeah, I mean, for me, I don't think this time is going to be different. I'll just be honest, right? I think that, look, there is a small chance that, yeah, we kind of super cycle or this is it. But no, I think more likely we're going to have a big run up and a big run down. Now maybe it won't be 80% down. Maybe it'll be a bit, it won't be as harsh. Maybe it'll be like 60% down, right? Or 50% down. Who knows, right? None of us knows. But I think that to your point earlier, the China mining ban and FTX and all these, the paper Bitcoins and all this stuff, I think we probably would have gone higher. Like, I think we probably would have touched 100, but so be it. I mean, we didn't last cycle and a lot of people got wrecked. And so I think the other element this comes into is how much of an impact do you think it'll have when governments are stacking? So obviously, El Salvador is known to be stacking. Bhutan recently got doxxed as stacking Bitcoin through mining. There are other governments that are mining Bitcoin, or at least they have wealth funds or sovereign wealth funds that are invested in mining ventures. So I know Ethiopia is one example. UAE is another example. For all we know, some of these other countries could be doing things and have not announced it yet.
I mean, what is so interesting, I think, like it's 15 years in and we're at government, mining with government resources. Like we're there already.
Yeah,
Not
exactly.
Evenly distributed, but we're there already.
And even this, the incoming US president is talking about Bitcoin strategic reserve, and think about how many of his team have Bitcoin, right? Trump has Bitcoin. JD Vance has Bitcoin. RFK Jr. has publicly said I think he put most of his net worth, or maybe his liquid net worth, I don't know. He's publicly said this. He put in most of it like a couple of years ago. There's so many senior people who are coming into the US government who are Bitcoiners, who are hodling Bitcoin themselves. So, you could see an argument there that, there's at least a decent chance that they do execute on the Bitcoin strategic reserve. Now, it's not 100%. Maybe it's like 60% chance that it happens in the next year, let's say. And so even that could kick off other countries. And of course, meanwhile, you've got all these big, well-known stackers who are stacking, right? MicroStrategy, Tether, these other public companies. There's so many of them who could all start stacking. And so it'll be really, if that kind of thing happens, then of course, like Bitcoin, it's theoretically possible that we kind of blast off to the moon. But I just think one piece of analysis that a lot of people miss, though, is they focus, as an example, they focus on, this is the amount of coins created by the miners every day, and therefore they're the only natural sellers. And okay, that's one group of natural sellers of Bitcoin. But don't forget, there's all these like OG hodlers who many of them are waiting for their quote unquote number, whether it's, I don't know, 200,000 or 500,000 or 600,000, whatever their number is. A bunch of them are probably waiting to sell some coin to buy a house or to buy a car, or, to look after their family or whatever. So when you blend all that together, who really knows? I think the more likely answer is that we will have kind of this kind of typical boom and bust and then rinse and repeat. Now, I don't know if that is on a 4-year basis. Maybe it is, maybe it's not. I don't know. But I am not sort of betting the house on hitting, 1 million this cycle. I wouldn't do that. I think I'm expecting much lower than that. But Who knows?
Yeah. So we talked about this path of the debt spiral, basically that the US is on, and that we have a new path that opened, which is adopting Bitcoin as your money, right, or at least as your main store of value. How do you see the path towards what people call hyper Bitcoinization, or do you even see that happening in general?
Oh, I mean, hyper Bitcoinization, I see that as kind of the eventual outcome. But the question I guess you're getting at is, what will governments do about the debt? And that's not going to be a pretty answer, right? I think there are going to be some really big, tough conversations that have to be had. Some of that is going to be like a generational compact. It'll be sort of, people will have to decide, and look, I mean, it's Bitcoin for millennials, and, I'm a millennial. I presume you're a millennial, right? I'm 36. So I think many people in our generation, and let's say the Gen Zs below us, they are being asked to chip into the Ponzi. But when we get old, the Ponzi is not going to be there for us.
Yes, correct.
So politicians and governments are having to grapple with that. And how many people are going to be okay with that versus how many people are going to say, hey, you know what? I don't like the deal you're offering me. I'm going to go somewhere else. So I think there's going to be a big kind of escalation in the flag theory, sovereign individual sort of idea. So now, not everyone will do that, but I think that's one aspect of it. We will start to see governments that have to start competing to attract employees, investors, entrepreneurs. We're seeing that even in Portugal. I heard there were rumblings that Portugal was trying to attract under 35s with a tax incentive, something like this. So it's kind of, we're starting to see that where they're trying to do this, but at the same time, something has to give, right? Like they have to either cut the welfare state and cut the Medicare stuff down. I mean, I just don't see how it's going to be sustainable. So I think
someone's
they're going to have
come clean, right?
I mean, people are going to have to come to the negotiating table. I think that's just bottom line. I think people are going to have to come to the negotiating table and say, all right, especially in the US, they might have to just say, look, all right, look, this is what it is. Millennials and Gen Z, you're going to pay into the system. You won't get a pension yourself, but maybe there's some other incentive or some other thing that we can do for you. I don't know. It may come to that, right? Because that's where this debt spiral stuff is going if they don't massively cut. And to be honest, even with massive cuts, it might not, in certain countries, it may not really even be feasible to really right that ship, right? Because some of the political conversations are sort of pushing that way as well. Now, of course, it's hard to, I could argue in the UK, this also helped the political outcomes go the way they did, right? That the quote unquote grey vote is what motivated, not a lot of cuts to the welfare system in the UK. Now, in the US context, you're thinking, well, Elon and Vivek are there with their Doge, right? They're going to get in there and try to cut. Now, hey, more power to them, and I hope they're successful. I wish them all the success, but it's going to be hard. It's going to be hard because they are going to be cutting into the pork barreling that a lot of the politicians winning votes, they use that pork barreling to win votes for their so how hard is it going to be to kind of cut that spending? Now, yes, there are certain easy kind of low-hanging fruit. Sure, you can probably cut those. But the real resistance will come when, those politicians are going to resist those cuts. So we'll see exactly how that plays out. But yeah, I think the debt situation, especially in the US, is very bad. It's going to get worse, barring some kind of incredible economic innovation, some incredible, economic boom. And maybe, hypothetical, right? Let's say AI and robotics really takes off and there's some massive productivity boom. Hypothetically, you could see a scenario where maybe they sort of get their way, where they kind of dig their way out of it. Maybe. The more likely scenario is that it's just going to sort of keep getting worse from a debt perspective. And that is going to, again, come back to what we were saying, the generational fighting or the generational agreement. We'll see.
Well, I think, people talk a lot about the US debt, which just crossed like 36 trillion. But if you look at unfunded liabilities, basically all the promises on paper, it's 225 trillion or something. So I don't know if an AI productivity gain can actually get to over 200 trillion, right? But I think, again, this shows you the size of the battle. Like, your pension is already gone. Like, it's not even there. Millennials, as you said, we will probably have to pay for the pension of the people that are about to retire almost, right? Or, the generation that came before us. So there is nothing for you. There's literally nothing for you. Like that should be, I think, the big realization. And what I also think is interesting, that when you think about like solutions, the simplest and also dumbest thing I'm hearing is, we should reprice gold. Right? Like, do you know that argument, right? Like, the countries just say, we're going to reprice gold to, I don't know, some price of how many years ago. And then, in nominal terms, we will be richer. So we are able to like pay it off. And then I think like, wow, again, I don't have an economic background, but that sounds pretty
crazy.
simplistic.
Yeah, it's just like trying to write new numbers onto a...
Exactly, yeah. I give you a new number and then like, poof, your life is less bad. Or I don't know.
Look, let me put it into practical terms, right? Like, I think there are lessons that we can take either from history or from looking around the world. Look what happened in other countries around the world when this happened, right? The Argentinas of the world, the Brazils of the world, the Venezuelas of the world, the Zimbabwe's, and so on. Eventually, they kind of reach a point where, they kind of have to start a new currency and they lop off a few zeros and they start again. That's historically been the pattern. Now, in some cases, maybe they elect a Milei or a Bukele or a Trump who's theoretically going to try to fix it. But, let's make no bones about it. People like Milei and Trump are inheriting a very bad, a bad situation, a very bad economy that they have to now fix. So but I think there are some parallels and lessons that we can take. And so I would say, listeners, really, you've just got to think of it as, how do I save in a way that's effective? I saw a funny post the other day, or tweet from I think it was BitPain. He said, I'm okay with boomers charging me 10x for their house if they pay me 1,000x what I paid for my Bitcoin. So, or something like that, right? But the point is, every generation has their different opportunities, right? Of course, challenges and opportunities, right? Like, you and I, we're not boomers. We can't go back in our time machine to 30 or 40 years ago and buy our property for 2 strawberries, but we can buy Bitcoin now. That's our opportunity now. Yeah. And so I think that there's always challenges and opportunities. And really, I think the best opportunity over the next at least 10 to 20 years is Bitcoin.
Yeah. And so if we move to this hyper-Bitcoinized state, do you think there will be a time where like products and services are priced in fiat and Bitcoin at the same time? That we have like this phase where we are like crossing over in that sense?
Yeah, so I'll give you another example. If you go, there's different countries around the world where this kind of thing happens, where they might show you two sets of prices. They might show you their local fiat currency price and the US dollar price.
Yeah, good point.
They could do the same thing with Bitcoin, right? So they could just say, okay, here's the fiat price, here's the Bitcoin price, and whatever. Yeah. And so in some of these countries, the way it might even work is if you, as an example, maybe some of the Caribbean islands, I know some of them do this. There are, shops there where they might put the price in XCD, which is like the Eastern Caribbean dollar, and they have a US dollar price. So you might pay with US dollar cash, but they'll give you the change back in ECD, in Eastern Caribbean dollar. Right?
Yes,
so that's just as an example, right? So we could see a similar kind of thing. Of course, in the digital parallel world, we might make a Lightning payment or an ARC payment or something, and it's going to be just done in a very simple way like that. So some of these aspects of dealing with physical cash might be an anachronism, but of course, there's also the conversation around CBDCs, right? So that's also caused another fight there because what we've seen is some of the more right-leaning parties are trying to say, no, we will enshrine the right to pay with cash, to pay with physical cash. And so I think Trump also made a promise about saying no CBDC. And I think in the UK, that some of the more right-leaning politicians have also made similar statements. But, we might see that that dynamic happen as well, that people try to go away from the digital as a means of staving off the CBDC threat.
Yeah. I find it interesting because one of my points of bigger realization of Bitcoin is that a lot of these things that we talk about, like dual pricing, as you mentioned in countries, right? Or other countries having hyperinflation and losing their currency even, there is, I just looked it up like last week, 11 or 12 countries that have the US dollar as their main currency of their entire country. I mean, like, imagine that. That's crazy. But what made me realize the bigger potential of Bitcoin or the reasons of existence is that all these things happened already, right? And they all happened in exactly the same type of money system, a fiat money system, but they are just unfortunate enough that they are not the world reserve currency, right? So in the West, we look at the euro or the dollar, but we should not forget, or we should keep in mind that this is the exact same money system as the examples that you just gave that have hyperinflation, right? Or have dual pricing, or where people take the stronger currency and give you the weaker currency in return after you buy something. So once you realize that things like that have already happened and that it's kind of like this natural way of how people deal with it, they just start asking for the stronger currency. And people buying stuff in Eastern Caribbean, they don't want to exchange for this Eastern Caribbean dollar. They just have the dollars in their pockets, right? So there's some convenience there as well. Like stuff like that already happens. So once more people understand that Bitcoin is the best money, there's a lot of precedents that shows us that people will start moving towards that better money. Right?
The other point I just want to quickly add here is that for a lot of people, they might have heard about Bitcoin in 2013 or 2017 or 2021, but they didn't start seriously saving into Bitcoin until more recently. So that's also another thing. And there's a lot of people who maybe they might have a very small allocation to Bitcoin, but once people start having a serious allocation to Bitcoin, that's a very different mental shift that's required. So it takes time, right? No matter how, intelligent you are, sometimes it just takes time to make that transition.
Yeah, I think I have one question. Maybe it's two questions in one. I'll let you decide. But like when we go to this hyper Bitcoinization state, right, and everything is priced in Bitcoin, you currently have economists that say, well, 2 or 3% inflation is good, right? Because there's velocity of money, etc. I think it's stupid, but anyway, I think that's a different conversation. But they say that is good. In Bitcoin, there's a finite supply, as we know. How does that influence this velocity of money, or like the speed at which people can exchange? But also, how does that then impact, what is mentioned as like business cycles? There's like this organic way of going up and down, etc. How do these two things work
So the
together?
velocity point, I think I would say it's more about people just, do you anticipate to benefit from this exchange or not? I don't care that much about like what is the volatility of the money and so on, like whatever, right? Like if people believe they will benefit from the trade, they do it. If they don't, they don't. big deal, right? So to me,
exactly.
I think, yeah.
Sorry. So how I interpret that is like, I have a value proposition. You are my possible customer. And I say, I want X amount of units of Bitcoin. And at that moment, you decide if that is something that you would want to exchange with me. And then when we shake hands, that's basically when we put a price on it.
Yeah,
right?
yeah. So I think some of the economists, maybe they do a little too much hand wringing about more volatility and more whatever, because sometimes, and there's this infamous, I think it's MV over PQ, right? It's kind of like this infamous velocity equation. And so I think they're just looking at the wrong thing. They're just looking at it in the wrong frame of mind. It's not about that. It's not about trying to get more velocity. It's not that having more velocity is a good thing. Not really. It's more about, okay, now you could argue, okay, yes, in the sense that there were lots of people doing trades that maybe that raised, quote unquote, GDP or final output or whatever, gross output or whatever, some of these metrics. But to me, it's more about focusing on what enables economic development overall and what enables people to get what they want, right? It's not just GDP number go up, but it's also, as an example, people have a trade-off of how much work they want to do versus how much leisure time they want to have, right? Not everybody wants to do, 100-hour work weeks, but some people do, and they're happy to do that.
Yeah.
And they're happy to, so be it, right?
But that's the point.
Yeah.
To have that freedom, right?
Yeah. So I guess, so that's kind of my answer on the velocity question. On the boom and bust question or the economic cycles question, the Austrians answer this by talking about what's known as Austrian business cycle theory. So the basic idea here is when the state controls money and it manipulates the cost of capital down artificially while still making sure everybody uses that same token for money, right? The fiat currency in this example. What that causes is this boom and bust effect, right? What it causes is this malinvestment into unproductive sectors, right? And so you might have seen this explained as an example when people colloquially spoke about things or they saw some crazy thing happening, they'd be like, hey, that's a zero interest rate phenomenon, right? That's only happening because the cost of capital is so ridiculously cheap that, we're seeing these kind of nonsensical behaviors in the world of business or even cultural.
So you're allowing things to exist that don't really have a right to exist.
Yeah, in a loose speaking sense. Let me put it this way. When malinvestment occurs, it's like resources have been put into projects that cannot be seen to completion. Because based on the resources available in the economy at that time, there's not enough to support all of those projects to completion. So the analogy I think Mises uses is a master builder as one example. So this master builder is building a house and he first sets the project. He architects it based on 10,000 bricks being available. But later he realizes, oh no, there's only, 8,000 bricks available or, whatever. But the point is, he's already drawn up his plans for the 10,000 bricks house or whatever. So the point is, the resources to complete all the projects are not available. People were given a false signal, right? It's like you're flying the plane, but your instrumentation is off, right? It's telling you the wrong barometer or the whatever, right? So that signal being sent around the economy is a false signal because it's been artificially depressed or lowered. That's the net result of these government interventions. So central banking, the existence of the lender of last resort, implicit or explicit bailout guarantees, legal tender laws, capital gains tax laws, all of these things, they all interact to create that situation. And so then, yes, we see these booms and busts. And so absent that, the Austrian argument is absent these government interventions in the market for money and banking, we wouldn't get this kind of malinvestment factor and people could just invest and grow in a sustainable way without having to go through this, and the results, we've seen things like the dot-com bubble. We saw the GFC and, arguably this is what people talk about. We're living in the everything bubble.
When I listen to this, then for me, it feels like there's this economic theory that doesn't really work in favor of the people participating in the economy. It works in the favor of, for lack of a better definition, the people controlling the economy. Is that a correct assertion? It's not organic communication between people. It's like a frame that people are put into and they cannot, they cannot go outside of the frame. They bump the wall, basically.
Essentially, people are kind of trapped and they are enslaved in a way that, and they don't really realize it. Now, of course, Bitcoin is the way out, and the smart ones will know, okay, yeah, I've got to get Bitcoin to get out of this. Yeah. But there's a lot of people who still haven't realized that yet. And so they're participating in an economic system that doesn't benefit them, that basically steals from them. Yeah. And it's time more people realized it.
Yeah. Okay, so when we talk about Bitcoin is this new system, which eventually, because the incentive is the hardest money, the best reward to ever exist for your productivity, therefore it will drive productivity up. People will work harder, therefore we will become more effective. Therefore, you will see prices go down because there's this incentive, because the reward is so hard that people actually do their best to create the best that they could create. But when we talk about deflation, a lot of economists say, well, but deflation is bad. I think it's unfair because they don't finish the sentence, right? The sentence should be deflation is bad in a debt-based system. Yeah, how do you view that kind of like shift, maybe also in thinking? Like how does a deflationary economy affect this long-term saving and spending that we previously talked about? Are people going to wait until their shoes are cheaper or their car is cheaper? Like what is your answer to that?
So yeah, there's a balance. There's a trade-off, right? We don't live forever. Yeah. But yeah, the caricature is, oh, nobody will spend and the economy will collapse and it'll all be over. But the fallacy there is a fallacy of composition. What may be true for one or some firms is not true for all firms. Not all firms are going to go under. So that's kind of the short way to think about it. The real way to think about it is to recognize that there have been times where, under the classical gold standard, the money supply was relatively stable or growing only at a very small amount, but the productivity was growing much more than that, such that you saw prices come down over time. So even if you had the same salary, you could buy more with it. And we saw that. I want to say, I think Rothbard wrote about this, and I think he was writing about the time period in the 1880s, around then. So it's actually an interesting time period around then where prices were actually coming down over time. And I believe in a Bitcoinized world, a deflationary world, let's say, a growth deflation, the good kind of deflation, that we would see a similar thing, that you might be getting paid the same, but your purchasing power is going up.
Yeah, which is a good thing, right? That introduces an age of abundance in that sense.
Yeah, exactly. So I think it'll allow more people flexibility in how they work. I think we'll start to see various cultural problems start to fix up as well. So as an example, a lot of people talking about the fertility collapse and this kind of thing now. I think we'll start to see that reverse and start to see, once we sort of get onto the Bitcoin standard, I think we may start to see the next baby boom happen again and start to see, okay, people are optimistic, positive about the future, and they are also in an environment that is socially and culturally supporting them to get married and have children, as opposed to the environment that is maybe stopping them from getting married or encouraging them not to have children or to only have one or two instead of having, a bigger family. So I think we'll start to see some of these cultural shifts take place over the next 20, 30 years.
Yeah. Yeah, I also think like an age of abundance or period of abundance that will invite you to do all these things that are creating more uncertainty towards the future, right? Like doing a certain venture or having kids or getting married or moving somewhere or whatever. Because you are more, how do you say that? Like
you feel like you have a safety net, right?
Exactly. Yeah. You're invited to do that because it feels less dangerous than how it feels now, right? And yeah, I believe that too. I only think there's only positive consequences of that eventually. But let's see where we end up. Interesting.
Yeah, but I see it as like the challenge is making it there, right? Because I believe there will still be some cycles to come, and you may need to deal with big drawdowns in Bitcoin, and there'll be setbacks on the way, and so it's about best managing yourself and your family through that period of hyper Bitcoinization.
Yeah. All right, my last two questions. What makes you most bullish on Bitcoin's future?
Well, I just think it's more and more people learning about it, and of course, governments and central banks really aren't doing a good job of encouraging you to use their money and to store your wealth in their system. Less and less people are doing that. And over time, there are more and more people who are younger and seeing that the system isn't working for them. They don't want to buy gold. They want to buy Bitcoin, right? I think, over the next 10 years, I think as an example, look, I think gold will probably still go up, but just nowhere near as much as Bitcoin, right? So I just think there's just a lot of people who are coming into the system and realizing, this system, the fiat system does not work for me, and it's time to learn about Bitcoin. And what we're seeing is people at all levels, whether that's individuals, companies, funds, public companies, governments, they're all starting to realize, we need Bitcoin. And so, they've got a problem. It's just that not everybody understands they have that problem, and they don't understand that Bitcoin is the solution to their problem.
Yeah, that is an interesting thought, right? That, if you do the work, you can verify that Bitcoin is provably better than any other alternative. But just that understanding is not evenly distributed. So I think once you realize, again, like for millennials, there won't be a pension. There's nothing for you there. You will probably pay for people to retire that you don't even know. Just as like in the US, people work 3 out of 5 days a week, I think, to help their government pay interest on a debt that, the people helping the government pay the interest never really even benefited from, like it could be a debt from 20 years ago, basically. Yeah, once you realize that in combination with not many people have figured Bitcoin out, I think that is the biggest opportunity for our generational peers. Like this is the moment that you can, I want to say, jump on that and challenge yourself. So yeah, I love that you shared that. All right, last question, and I ask everyone the same question, which is, what is a core belief that you will never let go?
Focusing on family, I think, is something that you won't regret, I think, long term. That's something where maybe when we're younger and more rebellious, there might be times where you sort of don't see the importance of that. But I think as I'm aging and as I'm a father now, and my wife and I are sort of still in the process of having more kids, it sort of dawns on me more that you have to make sure you look after your family. So that's probably the main thing that's probably not going to change.
That. All right, man. Thanks so much for sharing. Thanks so much for your time. I really appreciate it. And yeah, man, maybe we'll see each other at a Bitcoin conference sometime.
Yeah, sure.
Cheers.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, please like this video if you want to help shine a light on the message of Bitcoin, and subscribe to my channel to stay connected. I hope to see you for a next episode. Bye.